Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the TGI Thank God It's Friday, the 26th of May, Bull versus Bear webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. Welcome to a long weekend, both sides of the Atlantic, which I will come to straight away. So, Memorial Day holiday on Monday. Okay, Memorial Day holiday on Monday. It's a holiday. Please don't trade. Illiquid, market ready moves. Now, we could have obviously something coming out over the US debt ceiling. If it does, and it does come out and you do decide to trade, and incidentally, it's a UK holiday as well. There's also holidays in Europe. Although European markets are open, UK markets are closed. So markets are likely to be really quiet. It's not just the US, okay? Even when the US is closed, global markets get very, very quiet. But with the UK closed as well, it makes it double quiet. And even though European markets are open, it's kind of a national holiday in Germany and Switzerland and a few other places. So we are going to be probably choppy and liquid, and we could have stuff out on Memorial Day. So there are two posts in the threads, and there are links. Sorry, not new. Two posts. Two posts in the forums. Okay, here they are and here they are. You know what? I'm just going to share them. Why don't I just share them? They're in the chat there. Okay, please do take a look at them. Please be aware. Please go to it's not the CME site. One of our traders in here talking about, the CME site's not super clear. James has gone and made it very clear in here when the markets are closed. Know when the markets you're trading closed. Most of you are trading at ES and NQ. Go check it out, right? It's not difficult, right? If you go over and you're trading when the markets are closed, you're going to foul the challenge and it will cost you to reset. Why bother when it's just a bit of due diligence? You know what? This is stuff you need to know as a trader, right? We get loads of questions on this. Oh, why can't you just take me out of the market? Right? Well, because you need to know when the market's open and closed. We expect you to know. When you're live, we expect you to know, right? When the market's open and closed. Why can't you change economic data? Oh, where can I find the data? We'll find the data. We should know when the data comes out. If you don't know when the non-farm payroll data comes out, you shouldn't be trading, in my honest opinion, right? If you don't know when the Fed comes out, you shouldn't be trading, okay? Even if you're trading from a technical analysis perspective. I've been a technical analysis for 30 years, okay? I've been mostly using technical analysis I've been a technical analyst for over 20 years and used it in my broking when I was a broker back in the 90s, okay? But I still knew when non-farm payroll came out. I knew when the Fed was, right? No matter what kind of analyst you are, not what kind of trader you are, no matter what kind of approach, you should know when these major events are. You should know when the holidays, when you're whatever markets you're trading, when they're open and when they're closed, and when they go close. And if they're going to close, you need to be out. Okay, it's too risky to be in, particularly this Memorial Day. If you leave open positions up, if you had a real live trading open position in the real live markets and the market was closed and we couldn't get out of the position, and all of a sudden the debt ceiling was passed, or the debt ceiling, they said it was a massive impasse, we may go to default here. The market's going to move massively and the market will be closed. And if you've got an open position, it's going to cost either you money if it's your account. If you're on the evaluation, it's going to blow the evaluation. And if it was our money in a real live account, we would be losing money. Okay, so please know this stuff, right? You should know this. If you guys are on these challenges, you want to be professional traders, do your due diligence. So 2 threads, I posted them both in here. I feel like I'm really ranting now. I don't mean to sound like I'm ranting. I just get frustrated because people come on and go, well, where can I find a calendar? I can't believe you're trading and paying money to do a challenge if you don't know where the economic calendar is. We have 2. Here they are, right? Where are we? No, wrong tip. Wrong. Well, where am I? Here we are. There's one here in the traders room. We give you right here, and then right above it, a big button saying Open CME's Daily Economic Trading Release. Or you can just Google trading calendar, and you will get the options of loads of different trading calendars. Okay, I tell you what's good in here. The FX Street one is good. The investing.com one is decent in here. The Bloomberg's got its own one. You can just go and click enter any of these. So there's a whole page of them there. Pick another one if you want. Okay, but know when the major events are. Know what's coming up. Right. Enough of the rant. I'm over with that now. Okay, let me go back in here. So that's what we got. Memorial Day. Please be aware. Please be aware. Please be aware. Now we do have potentially a big event. We could get the debt ceiling passed over the weekend, right? So who knows, right? So markets could be super choppy on Monday. You might be tempted to trade. It could be really difficult. please know when the rules are. Okay, the other thing to be aware of, where is it in here? Turkish. Okay, Turkish runoff election is this weekend. It's probably not going to massively impact the markets you guys are trading, but it could do. Okay, so the anticipation is in this runoff election that the incumbent President Erdogan in here is going to run into a third decade. Okay, and the market doesn't really want that. Okay, the market does not want. Oops, sorry guys, in here. Got a call. Get rid of that. Thought that was on mute. So it could run into into his third decade. The market doesn't want him in power. Okay, but it looks like he's going to get in power. Hence, that's why the Turkish lira is hitting a record low versus the dollar at the moment ahead of this election runoff. So we're seeing the Turkish lira continue to get bashed in here in anticipation that Erdogan is going to win. Now, if he doesn't win, we could get a significant rebound in the Turkish lira. We'd also probably see a bit of a rebound, not massive, but a bit of a rebound in European stock indices, and that could help the US stock indices. Right? So this is kind of relevant. You should probably know about it. You should be watching. You know, it's a big partner as well. Okay, it's a big strategic. Turkey's always been super important strategically. So it'd be interesting to see what goes on there over the weekend. So again, know your global stuff, even though you're in the US or maybe just trading US products, still know what's going on globally. Right, what else have I got for you? Lots of interesting stuff. So let's go back to the calendar. This morning we've had some retail sales data out of the UK, better than expected. You can see here in green, that's helped the pound. I've got an article on this. The pound has been up, sterling gains against the dollar. The dollar's generally weak across the board this morning in here, but we are seeing the dollar weak across the board, but the pound is rallying not just against the dollar, also against the euro and other major currencies because of this better than expected, having been more weak recently, better than expected despite higher interest rates. So the pound doing better in there. So that's kind of a positive for the UK economy. And then we also had this in here this morning. This was yesterday, excuse me. This came through from yesterday. I think he reiterated this morning. Okay, when was this? Oh, this is an old photo. Maybe it was yesterday, maybe it was this morning, but maybe late yesterday. So Philip Lane in here, he's the chief economist at the ECB, the European Central Bank, and he's actually pushing back. Normally he's fairly hawkish, but he's pushing back and saying, you know what, he thinks that lower energy prices then will filter through, okay, not just in Europe, but globally to lower general prices, okay? Because the concern is that prices globally are staying stickily high. They're staying sticky, right? So even though energy prices now are falling, okay, in fact, gas prices are falling to the point now they're below pre-war, pre-Ukrainian invasion, okay, levels. Okay, so gas prices in Europe are coming down. So we've got that's being alleviated. Electricity prices are coming down. That should then see the prices of goods come down. Now we're seeing a stickiness, but he is the chief economist, and he's saying that we will see a reversal. The reversal in energy prices will come through and see a lower, broader prices as well. So that's kind of quite interesting as well. You know, he's the chief economist of the European Central Bank. What else do I have for you in here? This is more of a big picture now view. Now this is not a trading. Okay, this is not a trading article, but I did want to draw it to your attention. I think it's really interesting. I think you have to, I mean, I've got a Bloomberg subscription, so I don't know whether you need it for this. You get about 10 articles from Bloomberg a month without a subscription anyway. But this is a good, bigger thought piece on, you know, Germany, as we focused on earlier in the week, went into recession at the beginning of this year. It had its second consecutive quarter. Remember, a recession, 2 consecutive quarters of negative growth, okay? And we saw that for the first quarter, Germany had negative growth, and it also had it for the final quarter, the Q4 of last year. 2 quarters of negative growth, Germany in recession. But this is talking about bigger concerns about Germany. Is it in slow decline? If it is, then the consequences for the whole of the EU are very, very negative in here. So talking about the economic engine, the powerhouse of Europe is Germany, okay? Is it starting to falter? And that's I've only skip read it. I've bookmarked it to read later. And just a quick note on here before I go into all the more mainstream stuff. Oil edging higher slightly today. We're kind of staying in risk on mode. Stocks obviously continued their rally up yesterday with really strong close in here and looking generally positive in here. So now let's take a look at what the big focus is. Obviously, if I go to 5 things. So obviously yesterday we had Nvidia. I mean, we'll come to the tech stocks. I mean, Nvidia just shot higher, continued higher. AI stocks continued higher. global big tech players, Microsoft, Alphabet, all went higher. The Nasdaq was up 1.7%. It dragged the broader indices with it. Well, the S&P anyway. Dow didn't manage to gain. Nasdaq made a new multi-month. Actually, now we're over a plus 1 year high. So all looking super, super positive on the big tech side, on the AI side, on semiconductor side. All of that positive and dragging the broader market up with it. Okay, but the big focus in here stays on the US debt ceiling. So talks progressing apparently, but we've heard that before. Remember, it was basically this time last week. It was all looking quite good. Biden went off to, all looked like they nudged the meeting back. Biden went off to Japan for G7, and it was all looking quite positive. Stocks had broken out to the upside. This time last week, Wednesday, Thursday, Friday, I think it was this time last week. And then we got no kind of progress over the weekend. Then McCarthy was a little bit more downbeat. Biden comes back, and then stocks sold back off again, and it all looks a bit heavy. Now, I think we're going into the end of the week now with the same optimism, right? We've got a long weekend, okay? You've got the US holiday. We've got UK holiday as well. It doesn't mean they can't keep talking over the Memorial Day weekend. It doesn't mean that maybe they bring out a Memorial Day surprise, right? You wouldn't put it past the politicians to engineer it all and announce it all happy on Memorial Day or maybe on Sunday. I don't know. But it does seem like they're moving towards, but again, the market's a bid on both Nvidia and hopes. Okay, we are running out of time. I said a couple of weeks ago, well, these things always go to the wire, and we've got a long time to go. Well, you know what? They're telling us June the 1st is the date, and June the 1st is next Thursday. So they got through till Wednesday, and we've got holidays through till Monday, right? But they can still talk up to the holidays. And as the saying goes, 24 hours is a long time in politics. So yeah, we've got all that going on. We've got Citigroup strategies raised their rating on US stocks to neutral and overweight on tech shares and AI optimism. So that's positive. This is just, nothing really significant there. Elon Musk, Auto Partners, and a quiet start expected to the day. Now, going back to the calendar, yesterday we did have some very GDP data and PCE data, but that was for Q1. Yeah, very, 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 very backward looking, right? Q1 now, like 2-3 months ago. Now we get the PCE data in here for month on month for April, okay, and year on year for April, okay. So far closer, okay, more significant. Remember, the Fed tell us this is their preferred measure of inflation. It is a little bit backward looking. We're talking about April. We're at the end of May now, but nevertheless, we will be watching it. Durable goods as well. So they've got this data all coming out 8:30 today. So we're certainly going to be keeping an eye on that as we go through to that later today. And don't forget, at 10 o'clock, remember this at Eastern times, 8:30 Eastern, and then 10 o'clock we get Michigan Consumer Sentiment. Often gets overlooked. Don't forget that's coming out 10 o'clock. But the PCE data really is what we should be watching going in today alongside that durable goods data. What else do I have for you in here today? So futures are fairly flat, slightly up this morning. Stocks, US bonds steady. Debt market talks again. Technology shares continue to stay firm. Biden McCarthy looking to close US debt deal. Nothing we haven't spoken about. Wall Street prepared for Treasury's mess as default loads. Well, we can see where the Wall Street fears are. Let's go take a look at yields. Boom, 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 boom. Up again yesterday. Slight dip in yields. So this is prices down, right? Look at treasuries, 10 years. Why are they going down? Well, who wants to own treasuries when they might be going into a default? Your risk reward is to be either short or to be out of your longs, right? So that's why we've been seeing a 2-week sell-off. If they get it sorted, the treasuries are going to be back up here before you know it. There's going to be a massive rally in treasuries. I can almost guarantee that, right? Once they sort this out, we'll be back up this kind of area, okay? But if they don't, the risk to the downside is massive, okay? We'll probably see yields absolutely explode. Going back to the yield chart, you'll see yields. Well, why is that not low? There you go. You'll see the yields all the way up here, like way through 4%, right? On US 10 years, maybe up towards like 4.5%. They'll jump there, maybe even bigger than that, right? It'd be catastrophic if they don't get it through. Okay, absolutely catastrophic, but I'm sure they will get it through. What else have I got? I've got most of it covered in here for you now. We've gone through most of this. Market optimism over debt, crude we've already covered. Germany we've covered. Turkish lira, sterling, ECB. Fed to in here, still pricing. Go back to the June. In here now, only a 1 in 3 chance we get a hike in June, and now if we go to July, there's only a 1 in 3 chance we stand pat by July, right? Or just over 1 in 3 chance. 1 in 3 chance here that we're unchanged. More likely we're going to be either 25 up or even as much as 50 up come July. And now by year end, if we add it up across here, this is down and this is unchanged or up. Okay, so unchanged or up 29, 39, 40, about 42% that we're going to be either unchanged or up, 58% for lower rates. So remember, we were looking for 3 rate cuts. Almost no chance of that now. That's this one over here, right? And there's only there's a 42% chance we're either unchanged at year end or higher rates by year end. Okay, and before we weren't looking at that at all. We were looking for 3 rate cuts was the best bet in here. So a big shift by the market across to a more hawkish tone as the Fed have stayed pat, and if anything reiterated a more hawkish tone as the Fed have actually said we're on pause, we're not stopped, and we could be hiking rates again in the next 2 meetings. So we've seen a significant shift there. Quick nod onto the charts in here. So there's the treasuries, big sell off in the treasuries, still looking bearish, had a little rebound, but who's going home along of this stuff in here? Although they almost certainly will. They almost certainly will get it through, but who's going home long on the weekend? Treasuries, you wouldn't want to be, right? So if you didn't need to be. What else do we have in here for you then? A quick nod to the commodity markets, first of all. Gold. Continue to drift lower, little bounce in here today. Would only want to play this from the short side in here, and that kind of echoes the fact that we've had a little bit of a pullback in the dollar. The dollar's been very, very strong. A slight dip in the dollar, but only a slight dip. Probably looking for the dollar to remain firm going into today, and then for treasuries to probably restart their downside, and that probably means gold restarting to the downside. Let's take a look at oil. In here, big sell-off yesterday, but rebounding today. It's kind of been in no man's land. I mean, I've got no real strong view in here. Slightly bullish. You still got these higher sets of higher highs and higher lows. We made a new high 2 days ago. Fairly big sell-off yesterday, but it's rebounding. Slightly bullish on oil going into today. There's that rebound there from overnight. And let's go and look at the equities in here. Start off with the Nasdaq, which stays strong. Another unbelievable turnaround Wednesday. Much higher yesterday, Thursday. Can't see it on here, but I can tell you this is the highest it's been since April of last year. And now, then they had a slight pullback from the highs, and now pushing back to new highs, like literally as we speak. So we're back on the highs. Can only be bullish. I mean, I don't see how you can't be bullish, right? I don't see anyone's trying to pick a top there. Don't try and pick the top there would be my strong advice. A little bit of underperformance still by the S&P, but we did hold back on Wednesday these 2 lows over here. A strong hammer rebound. Doji pattern yesterday, indecision after the hammer rebound, but nevertheless pushing higher again today, and that still stays positive for me in here. We did take out this little resistance here, spiked above it, dipped, spiked, but we're back above this resistance area from over here. That's around 41.65, sort of 66, 67 kind of area. So looking for this to still go higher. If we put the retracement on of the sell-off in here, so the whole setback from the top in here, you can see where there's so that 40 just above that level in here. So yeah, back above right where we are now, actually is through the 50%. This will be a natural target, and it's also like the breakdown level. Look, we accelerated down through this area here. So kind of, I think a possible target today for the S&P 83.86, 41.83.86 on the top side would be like initial target for S&P. All right, I'm going to wrap it up there. Any questions from anyone? Anyone? Bueller? No Bueller. Showing my age. All right, guys, I'm going to wrap it up there. I'm going to wish you all not only a great trading day, a great weekend, a great long weekend if you're in the US, great Memorial Day. Have a great UK bank holiday. If you're in Europe, enjoy the holiday there as well if you have one. And then we'll be back with you. There will be no webinar. Let's remind, no webinar on Monday because of the US holiday. Don't trade unless you have to, and there's no reason you have to. Enjoy the time. Enjoy your friends. Enjoy your family. Come back on Tuesday. I'll be back with you with another Bull versus Bear webinar next Tuesday.